Hi, this is Nicole with LI Sound Mind, and today we're going to be talking about what exactly is the economic impact payment and what to do with yours. So, stick around to find out more. It's been all over the news. Stimulus, economic impact payments, you're getting your check from the government. But what exactly is it? A lot of news media has been talking about it, but not really explaining exactly what it is. So we're going to go over that today. Basically, what this plan is, it takes the amount of taxes that you owe and reduces it with a credit. Therefore, for your 2020 taxes, let's say you owed $10,000 for your 2020 taxes by the time you file. They're putting a credit on every person's taxes based off of your income amounts. So if you owed that $10,000 and you qualified for the $1,200 credit, then that means you're going to have your amount of taxes that you would normally owe be reduced by $1,200. So instead of owing $10,000, you'd be owing $8,800. They are not waiting to give you this credit until you file your taxes. They're actually giving it early. Based off of your previous tax filings, if you filed 2019 already, good for you. And that's what they're going to be basing it off of. If you didn't already file your 2019 because of the extension, then they're going to be basing it off of your 2018 income. They don't know what your 2020 income is going to be, but they have to start somewhere. If somebody made $200,000 in 2018 or 2019, they're probably not jumping all the way down to below the limits. Therefore, they're not going to be seeing any stimulus check. That could happen though. So if it doesn't happen now, you can get that credit in the future when you file your taxes. For anybody who received a check though, what they're saying right now is that if you received a check based off your previous incomes, but then this year, if you're above the limits for how much you can get, they're saying you don't have to pay that back. We're not sure yet how that's gonna 100% play out. We have to see when it comes time to the filing for the 2020 season. If you're in that rare category where you might have made less in 2018 and 2019, and then all of a sudden your income spikes this year, you might want to hold on to your stimulus check. Or if you know you can cash flow it, if you need to pay it in the future, then you can go ahead and use it now. Just know that you might need to give that money back. We're not sure, again, if that's going to be happening or not. We have to say. I kept on saying things about limits. Let's go over the specific numbers though. If you are single and making $75,000 or less, you're going to be getting $1,200. If you are married filing jointly and make less than $150,000, you're going to be getting $2,400. If you have children under 18 who are dependents, you're going to be getting $500 per child. This amount, again, is not taxed because it's a credit on what you would be owing on your taxes. That's why the amount that I'm saying right now, you're going to be seeing in your bank account. If in the 2018-2019 tax season you filed and you were above these limits, your amount that you're getting is reduced by $5 for every $100 above that limit. So, for example, if somebody who's single made $26,000 in 2019, they already filed their taxes, they would expect to get $1,150. The reason for this is that it takes that $1,200 and reduces by $5 for every $100. In this example, this person makes $76,000. They are $1,000 over that limit. That means that they are $100 increments above that limit. So take that $5, multiply it by 10, $50. That's $50 being reduced from this tax credit. Therefore, in that example, every $1,000 above the limit, you are going to be getting $50 less. Let's do married filing jointly. If a couple made $160,000 on their last tax filing, that means they are $10,000 over the limit. Instead of getting $2,400, they would be getting $1,900. That's $500 less for that $10,000 that they are over the limit. So whatever that amount is, divide it by 100, multiply by 5, that's how much you're subtracting. I know, a little confusing. There's calculators out there for how much you're supposed to be getting if you want to figure that out. Now, based off of this math, there's a point where the money runs out. When you're subtracting those $5,555 for married, filing jointly, the income limit is $198,000. If you're single, the income limit to get this check is going to be $99,000. That again is based off your 2020 future income, so there might be some things if you didn't qualify before on your previous tax filing, but you do qualify now, it might come out. Again, we have to see what happens during tax season. The reason why they don't have it above these limits is because they're saying that if you make more than this amount, that you should be fine. As we know, there are even people in the NBA and the NFL who make millions of dollars a year. They're still living paycheck to paycheck. That means any money that they get in is going out. They don't have any savings, nothing. The same thing can happen on Long Island with our high cost of living. It's expensive to live here. Food is higher. Rent is higher. Mortgages are higher. Taxes are higher than most places in the country. Because of this, there can actually still be somebody who struggles who does make $99,000 a year or more. If they have that high car payment, high mortgage payment, high cost of health insurance, these are things that can really eat away at that income. So somebody who might be making a generous amount per year on Long Island could still be living paycheck to paycheck. I'm going to do another video about income versus outgo. That's not the point of this video, but just wanted to let you know that if you are living paycheck to paycheck and you are above these income limits, there might need to be some lifestyle changes that happen. Stay tuned for new videos to find out more, but we'll get through it, guys. Since we understand what this check is, what do you do with it when you get it? If you haven't already seen my previous video about what to do when income is uncertain, go ahead and check that out if you are in a situation where you're not working right now or you have reduced hours. That will give you a more detailed understanding of what's called the 4 walls. The 4 walls is keeping the most important spending priorities at the top and everything else comes after. Those 4 things are food, shelter, utilities, and transportation. Again, check out my other video, explains it in detail. If your 4 walls are not covered during this time, this check is going to be going towards those 4 walls. Even though right now you might not be able to be evicted or foreclosed on if you don't pay your mortgage or your rent, there's going to be a lot of impact when this is all passes over. That money that you're not paying right now, it's not going to go away, that payment. A lot of mortgage companies are saying that, yeah, you can not pay your mortgage for 3 months. What they're not telling you is that that full amount of all 3 months plus the current month is going to be due on month 4. That means take that mortgage payment, multiply it by 4. That's how much you need to pay at month 4. Yes, that is a lot. If you're one of those people that can't make your mortgage payment, you have to contact your mortgage company and find out what type of relief they're offering. If it's what I just described, try everything in your power to keep that paid. If your company is having it where it just puts your payments from now to the end of your mortgage, that might be okay. What it does is that it takes your payments due now and puts it at the end of your mortgage if you fall into this category. You might pay a little bit more in interest, but if it's something that helps you get through this time, it might be worth looking into. If at all possible, keep it paid, but if you have a company that's allowing that, it might be something to take advantage of if you're not working. If your income is stable, keep paying. You don't want to take advantage of these things because you're just putting off what you're paying now until later, and then later you're going to have to pay it and you might not have the money then. We don't want to get into that mess. If your 4 walls are covered by your current income, even if it's a part-time job or something like that, or your hours are reduced but you can still live off of your income, Go ahead and take this money. If you don't already have an emergency fund, put it in the bank and have it where that money is there in case if you need some cash. An emergency fund is a way for you to cover expenses without having to rely on things that are like loans, credit cards, things that can have interest on them, which makes you pay more in the long run. My husband and I, just before all this started, had actually just finished setting up our 3-month emergency fund. We finished paying off my student loans, we set up our 3-month emergency fund, and we were starting to save for a down payment on a house. That emergency fund for us is 3 whole months of our budget of expenses. So rent, car insurance, food costs, anything that we need to have covered during the month, we have 3 whole months set aside. That's not 3 months of income, but 3 months of expenses. Having that emergency fund has been such a blessing. Even though I'm not working right now because my company's shut down with COVID, we don't need to worry because we have that cash in the bank to be able to weather this storm for 3 whole months. Actually longer than that because my husband is still working, so we don't even need to touch the emergency fund at this time. That peace of mind is priceless. I'm not sure where you guys are right now, but imagine what this would be like if you had 3 or 6 months of expenses in the bank. Would you be worried about, oh, I might get furloughed, I might get laid off? Yeah, but you wouldn't be worried about where's our next mortgage payment coming from? Where's our next food bill coming from? We don't have the money on hand. When you have that emergency fund, it really just takes all the stress out of it. If you are fortunate enough to not need this money, then use it for stimulating the economy. Use it for donating to charities, donating to churches, donating to food banks. You can use it to get food, takeout from local businesses that might be struggling. You can use it to help out somebody that you know is struggling at this moment, that lost their job. They don't have it. They are worried about losing their house. You can use this money to bless somebody or use it to splurge. Let's say you have an old cell phone, an old refrigerator that needs to be replaced. You can use this money to go ahead and splurge a little bit. Again, as long as these things are taken care of. Don't buy a new refrigerator if you're not sure where the food is going to be coming from that's going into that refrigerator. I hope this video helped you understand exactly what this is, the economic improvement payment, and also what to do with it. If you have any questions, comments, concerns, go ahead and put them in the comments right down below. I will absolutely answer any questions, respond to any comments. Let me know if there's any more topics you want me to cover, and I'll be happy to make those videos. Subscribe to stay up to date, and have a great day, guys. God bless.